Hello, good morning. You're watching Market Cafe on ET now with me, Vinny Motiwala, and along with me is Ankita Saxena as well. Ankita, very good morning to you as well. Markets not indicating, at least the handover that is coming in, nothing exciting. Today is a weekly expiry, so I believe there will be a lot of volatility in the Indian markets as well.
That's correct. Good morning to you, Vinny, and good morning, everyone. Vinny, we did see the big CPI number and the Fed minutes come out in the US yesterday, and stocks fell as recession concerns weighed on Wall Street, even as traders assessed the release of cooler than expected inflation data. Now, the annual CPI rate slowed to 5%, the smallest since May 2021. The core rate edged higher from 5.5% to 5.6% on a year-on-year basis. However, it was the Fed's commentary that there could be a mild recession that really had the investors worried. Now, the fact that the inflation was cooler than expected didn't really work on the markets because it was actually the Fed's minutes that came out and hinted towards a recession that really weighed down the market. Now, the Fed said that they expect the recent banking crisis will cause a recession later in this year. All three major averages ended on a down note. Dow Jones Industrial Average snapped a 4-day win streak, shedding 38 points or was down 0.1%. Earlier in the day, the index was up by more than 200 points. The S&P 500 declined 0.4%. Meanwhile, the Nasdaq Composite fell 0.8% in trade. Now, as of today, wholesale inflation data and producer price index report and weekly jobless claims are due. Very key important data points that will really guide for future rate hikes for the Fed. As of now, the market has been penciling in a 25 bips rate hike, which is of course due on the 3rd of May. So we will be keeping an eye out on that. Now let's look at the European market. European markets, however, closed higher, after the key US inflation data that came out yesterday. DAX was up 0.3%, FTSE was up 0.5%, and today we are expecting the Eurozone industrial production and the UK GDP numbers. And we will be closely tracking that and getting you all the details for that. Vinny, tell us how has this news impacted crude?
Absolutely, just let's look at the crude prices, because what happened overnight was that Brent crude oil prices rose as much as 2% overnight. Mainly, this is the highest level that we've seen coming in for the Brent crude oil prices in more than 2 months. As of now, Brent crude oil prices are trading at levels that we've not seen coming in since somewhere in mid of January 2023. So obviously, cooling off of this inflation data has spurred hopes that the Federal Reserve is actually getting closer to ending the cycle of interest rate hikes, and that has cushioned some bit of that impact that we saw because of that build-up in the US crude oil inventories that actually started happening, and that data point came out day before yesterday. So yes, keeping an eye out on that one. Overall, as of now, when you look at the oil prices, overnight it rose as much as 2%. This morning it's opened a bit subdued in trade. Oil prices have actually seen a bit of an easing. As of now, trading currently a bit on the negative side, but still Brent crude oil is about that $87 per mark. Everyone's keeping an eye out on, a bit of a caution that is lingering around in terms of concerns over the US recession or any weaker oil demand. That is something that continues to weigh on it. So a bit of a subdued move that has come in for the oil prices this morning, Ankita.
All right, then let's quickly take you through all the events that you need to keep an eye out for. Of course, in India, we have the Indian CPI number and industrial production numbers that are likely to come out today. Globally, in the US, like I mentioned, the wholesale price index, we also have the US initial job claims, and we have the US PPI numbers that are likely to come out today. And the earnings season has begun, and on our earnings calendar, we had TCS yesterday, we have Infosys today, and on the 15th of April, we have HDFC Bank. And of course, tomorrow it's a truncated week. Tomorrow we have a market off, a holiday on the back of Ambedkar Jayanti. Also, we have the weekly expiry today, and in corporate action, we have Vedanta, who will be meeting to issue on the issuance of non-convertible debentures, and we have PNB Housing Finance whose rights issue will be opening as of today, and we have the buyback issue for Imami that will open as of today. So these are the events that you need to keep an eye out for, and we will be tracking very closely.
Okay, Ankita, let's move on and actually just talk about one of the points that you highlighted was obviously the US inflation. That data has eased off. It's at the lowest levels in nearly 2 years, but the core prices that will actually continue to keep pressure on the Federal Reserve. Now, when you look at the consumer price index that has come in for the month of March, that rose by 5% year on year, dropping to from 6% in the month of February. However, the core CPI rose to by 5.6% YOY, following a 0.4% monthly jump that we've seen coming in as well. So that's the data that we're watching out for. Important data that impacted most of the global markets as well as the crude as well, Ankita.
Right, and staying with more news flow from the US, minutes from the March Federal Reserve meeting of the FOMC shows that the officials ultimately voted to increase the benchmark borrowing rate by 0.25 or 25 bips, the ninth increase over the past 1 year, while also emphasizing on the need for policy flexibility. And the biggest takeaway, however, was that the officials are projecting a mild recession starting later this year. And the reason for that is the banking crisis, the SVB fallout that we did see coming in, and the Signature Bank collapse. No, but the concerns over the broader economic conditions remained lofty, particularly in the light of the banking problems, with some members backing a 50 basis points hike as well.
Okay, and let's just talk about IES Fatih Birol. He said, and actually he slammed the OPEC Plus production cut, says that it is a bad surprise for the economy. Now, furthermore, he adds that he sees a downward pressure on the prices and supply security concerns as more countries are now producing natural gas, which will lead to a float of LNG. Oil could actually shoot above the $85 per barrel mark in the later half of 2023 is furthermore what he adds as well.
And investing legend Warren Buffett sees possibility of more bank failures down the road, but depositors need not be worried. He said that some bankers will continue this behavior and that will put the shareholders in some of the stocks at risk. However, he also said there was unnecessary fear about depositors losing money when the system is set up to protect the entire nation's deposits.
And getting in some update actually, from Softbank and Alibaba. Now, what is happening is that Chinese e-commerce giant Alibaba shares actually tumbled after Softbank has reportedly sold its entire stake. Now, reports suggest that Softbank has sold roughly around $7.2 billion worth of shares in Alibaba, and this is via prepaid forward contracts. Because of the sale, Softbank will now only hold a 3.8% stake in Alibaba, which has a market cap of over nearly $250 billion.
And well, Warner Brothers recently announced that it is combining content from HBO Max and Discovery Plus to roll out a new streaming service called Max starting May this year. The company seeks to take the fight to streaming leaders Netflix and Disney.
Okay, that were the top global headlines that we had for you all this morning. On that note, we're going to sip into a short break, viewers. Don't go anywhere. We'll be back with more domestic news after this break.
Welcome back. You're watching Market Cafe with me, Ankita Saxena, and with me is Vinny Motiwala. Now, we'll move on. In the recent times, the race to the moon has intensified, with countries like India, the United States, and even South Korea planning to launch missions to the moon. And now China has also joined the race earlier today. We tried to decode this news of the race to the moon, and here's a look at this explainer.
Underlining its ambition to push the boundaries of space, scientists in China's Wuhan, they've held their first conference to discuss the building of a crewed base on the moon itself. The extraterrestrial construction conference, which was happening at Huazhong University of Science and Technology in Wuhan, has seen the participation of more than 100 researchers from Chinese universities, research institutes, and space contractors. From building the basic infrastructure on the moon to the use of robots, the simulation of the lunar environment on Earth, this conference has really discussed it all. In recent times, China has not shied away from projecting its ambitions to increase its footprint in space. In fact, the chief scientist at China's National Center of Technology Innovation for Digital Construction has said that, and I'm going to quote him, building a habitation beyond Earth is essential for China's strategic needs as a space power. So this conference has also highlighted the timeline for China's flagship lunar exploration mission, which is called Chang'e, or Change if you'd rather have it that way. In 2025, in fact, China plans to send a mission to collect samples from the far side of the moon. And this is going to be the first in human history. Now, China's space push comes at a time when countries like India, like the United States, even South Korea, all of them are accelerating their timelines to land on the moon. India's ISRO planning to launch Chandrayaan-3 by the middle of 2023. The Chandrayaan-3 would be a follow-on mission to India's Chandrayaan-2, which of course, unfortunately, failed to land that rover on the moon. By the end of 2024, India is also eyeing its first ever human space flight through the Gaganyaan mission. And the US is not too far behind. Recently, it announced the crew for its Artemis 2 mission. It's going to be the first mission to carry humans to the moon's vicinity since the year 1972. And if all goes well, NASA is planning to send humans back to the moon as early as 2025. And it's not really just the big powers. Even South Korea is planning to conduct its first launch of a commercial-grade satellite, and this is going to happen next month. Just last year, South Korea conducted their first satellite launch as well. So clearly, the race to the moon is heating up, and with all major powers in the mix, humanity is perhaps all set to conquer newer boundaries.
Thank you so much for that, Vikram.
Welcome back. You're watching Market Cafe. Now on to some earnings that came in yesterday. Tata Consultancy Services has finally kicked off the earnings. And with that, their quarter seems rather glum. Nonetheless, the company has reported resilient demand and strong order book. My colleague Anisha is joining us to break down all the details for you.
Well, Q4 of TCS disappointed the street, and that's because the rupee revenue has come in at 59,160 crore, while the street was expecting a number of 59,320. Even in dollar terms, the growth has come in at 1.6% versus the street expectation of close to 2%, and the constant currency growth has been lower than 1% this time around. Remember, just in a couple of quarters ago, this constant currency growth used to be between 3 to 4.5%, and that slowed down substantially. Though, having said that, at least the deal win number has been quite strong at $10 billion for the quarter. The net count addition has been at around 821, and that compares with a decline of 2,200 that the company had reported in the quarter gone by. So at least a bit of an improvement, but the margins also have managed to disappoint because that came in at 24.5%. Street was working with an improvement of at least 40 to 60 basis points, and that hasn't come through despite the fact that there was a lot of currency tailwind. So we'll try and get more details from the management on that. But so far, it looks like a bit of a miss coming in from TCS. Apart from the fact that attrition has cooled off and deal win looks steady, it looks like a disappointment on all parameters.
Okay, that's the roundup of the numbers. Thank you so much for that, Anisha. But, let's look at the snippet that we had in terms of a press interaction with the outgoing CEO and the incoming CEO.
We'll need to see how it plays out. Like Kriti said, the sentiment is negative. Once that plays into the system, it will take some time for it to play out also. So immediate near term, definitely wait and watch mode. But medium term, from whatever discussions we have had with clients, we are not seeing large scale project cancellations. We are not seeing people rethinking their transformation agendas. Many of the longer term projects are still on track. It's more the discretionary projects which have been deferred or put on hold, or things that you would expect to start off post the winter holidays that has not yet come about. So these are the immediate impact of that sentiment going away. We have seen nothing that indicates that the structural story on technology is in any form impacted, but it requires careful watching. But overall, we continue to be quite optimistic, and we'll have to wait and see what the timing of it will be. See, the thing about US is that it moves very fast. Decision making is very, very fast, and also compared to any of the markets, US is the most risk-taking market. So they move fast on the downside, they move equally fast on the upside. So I wouldn't say that 2 quarters is out. They reacted to it. What they have done is to defer, the most deferrable projects, but it could come back equally fast also. So we'll have to wait and see.
See, from a focus area, no surprise. Immediately, I would like to meet our customers, understand their priorities, what they are focusing on, what they intend to do in the near term and medium term. I would also like to. I've not gone ahead and met though we've been talking to our immediate leadership team, we would like to meet the larger set of associates and provide them the comfort of continuity. And the last one from my focus is all these years I've been quite comfortable on the BFSI side, being familiar. I need to get comfortable with the non-BFSI side of the business. That would be my focus. From a structure perspective, Anita, that the structure was put in place after a lot of internal deliberations. So as I meet all customers and meet our associates, if there is any tweak that's required, we will do it appropriately. But it's essentially based on the discussions. As I said, the structure was put in place after all the internal discussions. So there's no rush to do anything there.
Well, a focus on the IT sector and the earnings season. Another IT major, Infosys, is set to announce its Q4 numbers as of today, and the revenues for it are expected to grow. The revenue growth is expected to be impacted by slower ramp-ups. And we are back with Anisha, who will be breaking down all these numbers for us. According to ET Now's poll, what is it predicting and the factors that we need to watch out for? Over to you, Anisha.
Well, yes, after TCS, all eyes will be on Infosys. The numbers are expected post-market come Thursday evening. And the expectation is that it's going to be a muted quarter. Remember, it's the seasonally weakest quarter for Infosys, as well as the revenue conversions have slowed down substantially. So that's why a constant currency growth of just around 0.6% is what the street is expecting. The dollar revenue is expected to be around that $4,700 million mark. The rupee revenue is expected around 38,850, and the margin is expected to remain flattish in the quarter gone by, because the increased travel cost is something which will offset any benefits coming in on account of utilization and currency, and also the fact that the top line growth is slower is something which will impact the margin leverage available. Profitability is also expected to expand and come in closer to that 6,600 crore thereabouts mark. As far as the other internals are concerned, the large deal wins is expected to be decent this time around. $2 to $2.5 billion is what the street is working with, and it's largely expected that the company will be able to beat its guidance for revenue in FY23, which stands at 16 to 16.5%, because the 9-month run rate has already been 18%. Margin is also expected to stay healthy, but all eyes will be on the guidance for FY24 going forward. 6 to 8% is what the ballpark expectation is of revenue growth in FY24, with a margin band which is 21 to 22%. But the management commentary on BFSI vertical will be important. What's happening to the headcount trends? How's the deal pipeline looking like? Any impact coming in of the weakness across Europe and US? All of those things will be keenly watched out for. But of course, the guidance will really hold the key for Infosys.
Surely you'll be keeping an eye out on those exciting numbers that will be coming out from Infosys today. But we have a very exciting lineup for you all on the market as well. And to talk about the markets, how should one be beating the street? 9:20 a.m. Pratik Gupta, CEO and co-head at Kotak Institutional Equities, will be joining in with us, talking about the fertilizer stocks which have been buzzing in trade. We have at 9:35 a.m. Kishore Rungta, CMD at FACT, joining in with us to talk about retail demand trends. What's happening in that space? 9:40 a.m. Lalit Agarwal, CMD at VMart, will be joining us, as well as at 10 a.m. To talk about cosmetic trends, sugars, swift rise that we're seeing coming in. We have Vinita Singh, co-founder and CEO at Sugar Cosmetics, joining in with us.
And well, India's inflation has eased to 5.6% for March this year, which is the lowest in a year's time. Even segment-wise, food inflation eased to 4.7%. On the other hand, industrial production for the month of February rose to 5.6% as opposed to 1.2% in the month of February last year. Now, ET Now's consulting editor Maithili Busnaramat is here to help us break down these numbers.
Well, after a long time, we finally got some good news on the price front. Retail inflation for the month of March 2023 eased to a 15-month low of 5.66, led mainly by a sharp decline in food inflation. This is particularly welcome news because in the month of both January as well as February, we had inflation numbers coming at well over 6%. But before we start celebrating, we must remember that this fall has been driven mainly by the high base effect. That is, when we compare the inflation numbers of March 2022, inflation in March 2022 was very high. Overall inflation was at 6.95 and food inflation was at 7.68%. So because of that, price inflation that we see in March 2023 seems low. So it's really more or less what we can call a statistical mirage. Prices are still going up, but thanks to the base effect, it seems to be a little less. So finally, we've got inflation back within that 6% band. Remember, RBI said that in the fiscal 2024, we're going to see inflation fall to 5.2%. Of course, a lot depends on a whole lot of imponderables, particularly as we've seen in the case of fuel. One really doesn't know after the OPEC cut. We really not know whether oil prices will continue to fall. We've already seen them move up. And given the importance of imported oil in the Indian consumption basket and the Indian economy at large, one really cannot be sure that this is part of a trend. But as of now, the Reserve Bank and government will pat themselves on the back, saying that retail inflation has fallen to 5.66%, conveniently perhaps overlooking the high base effect, the contribution to the high base effect. Remember, we're going into the summer months, and summer months typically we do see the prices of vegetables going up. Cereal inflation might be contained because government has large stock, but as far as vegetable inflation is concerned, we really cannot say. Also remember that even though the Met has predicted normal monsoon, the private forecaster has predicted below normal monsoon. So a whole lot of imponderables, but as of now, we have something to feel a little happy about. Inflation has come in below the RBI's upper tolerance band of 6% for the month of March.
Okay, that was all about the CPI IP data. But on that note, we're going to slip into a very short break. Viewers, don't go anywhere. We'll be back with more stock-specific updates after the break. Welcome back, and you're watching Market Cafe on ET. Now, let's just look at how the Asian markets have opened up this morning as well. There was not much of a positive cue coming in from the US market. So Asia markets seem to be a bit subdued in trade as well. Whether they look at the Hang Seng or the Shanghai, both Hang Seng is down almost more than 1% in trade, while the Shanghai is also down on a muted trade, actually coming in 0.06% decline is what we're seeing coming in as of now. Kospi, Nikkei, ASX 200, all of them trading in the red as well. So muted but with a negative bias is what they all are working at. Nikkei has just turned a bit positive. Nothing exciting that is coming in on that front. Even looking at the SGX Nifty as of now is down 18 points. Very muted. Flat start is what we're expecting from the Indian markets as well. 17,861 is what the SGX Nifty is at as of now. Ankita, so nothing exciting that we're expecting on the DC today as well. And weekly expiry, do not forget that could be a bit of a volatility that we could see coming in for the markets.
That's right, Winnie. I mean, SGX Nifty is as flat as a pancake right now. It's just down 18 points. So yes, we can expect a muted start with probably a negative bias given that the US markets were also down. Well, then let's move on and let's go domestic. Mutual funds activity speeds in March. Mutual funds deploy most capital in the last 10 months. They add exposure to oil and gas. Industrials, well, my colleague Somit is here with all those details. Take it away, Somit.
Well, if you see in the month of March, mutual funds have deployed close to 20,700 crore rupees in the Indian secondary market, which is the largest in at least the last 10 months. Now, they have added exposure when it comes to sectors like industrial, oil and gas, healthcare and telecom, while they have reduced exposure from sectors like IT, auto ancillaries and consumer staples. Now, the cash level has also marginally come down to around 4.8% of the AUM from 5% of the AUM that we had seen in the month of February 2023. Now, among large caps, if you see, mutual funds have been buying Tata Steel for the second consecutive month, while the weakness in the share prices of Samvardhana Motherson was used as an opportunity by mutual funds to add more shares in this counter. Similar case was seen in case of Zomato as well. While in case of GAIL, ITC, Vedanta, Adani Ports and Ambuja, all these stocks ended the month of March with marginal gains, and mutual funds have used this as an opportunity to exit these counters in the month of March. Now, among mid caps, if you see, Biocon, BHL and PNB have seen buying for the second consecutive month from mutual funds, while IRFC has seen selling for the second consecutive month. And when it comes to small cap, the fall in share prices of Mahindra CIE was used as an opportunity by mutual funds to add more shares in this counter, while Equitas, a small finance bank, has been seeing selling pressure from mutual funds even post the merger has been completed. And lastly, Jagran and Jindal Stainless, both these stocks were up around 5% and mutual funds has used this as an opportunity to exit these two counters, not completely, but some of the shares were sold in these counters. Now, in the last 3 months, if you see, mutual funds have been continuously adding stocks in Reliance Industries, TCS, HDFC, Bharti Airtel, while they have been selling in Britannia, Bajaj Auto, Dr. Reddy's. Among mid caps, they have been adding Muthoot Finance, United Breweries, Dalmia Bharat, while they have been reducing the exposure when it comes to L&T Tech, JSW Energy and Aditya Birla Capital. And lastly, in small cap stocks, they have been continuously adding BASF India, Tejas Network, Alembic Pharma and Polymed, while they have been reducing their exposure when it comes to stocks like CAMS, Root Mobile, Karur Vysya Bank and Archin Chemicals.
Okay, so Amit, thank you so much for that update. But that was the action in the large cap space that you saw from mutual funds. But also they were buying and selling, and some updates are coming in the Adani Group, and they've changed their position in the Adani Group as well. I believe Adani Green and Adani Transmission, they saw some most of the selling there. Well, Adani Enterprises was among others that have actually seen most of the buying. Could you give us more details on this? What is the mutual fund action in the Adani Group space then?
Well, if you see, among the 9 listed Adani Group companies, the mutual fund activity has been, or selling activity has been the highest in case of Adani Green, Adani Transmission and Ambuja Cements. Now, if you see, nearly 16 to 17 mutual funds have sold their stake partially in these 3 counters. In Adani Green and Adani Transmission, there were no buyers among mutual funds, while in Ambuja, 9 mutual funds have hiked a stake in the month of March 2023. Now, only Adani Enterprises was the Adani Group company which has seen more buying in the month of March compared to selling. Now, nearly 20 mutual funds have hiked stake in Adani Enterprises, while only 3 of them have reduced their exposure in this counter. In case of Adani Wilmar, 6 new mutual funds have bought stake, while in case of Adani Power, 5 mutual funds have bought stake. In case of Adani Power, if you see, the 5 mutual funds who have increased or fresh buying was seen from these 5 mutual funds, that is Motilal Oswal, Mirae Asset, Aditya Birla, Navi and Edelweiss, while in case of Adani Wilmar, the 6 mutual funds, fresh buys have been seen by 6 mutual funds. They are likely UTI Mutual Fund and ICICI Prudential were the top buyers or the fresh buyers in case of Adani Wilmar in the month of March.
All right, thank you so much for those details, Soumit. And we'll move on. RBI approved the reappointment of Sanjay Agarwal as Managing Director and CEO of AU Small Finance Bank. Now, how will this aid the stock? Well, we have my colleague Vamakshi join us with more details on this. Over to you, Vamakshi.
Well, Sanjay Agarwal, the MD and CEO of AU Small Finance Bank, has received extension approval by RBI for 3 years, and this approval is in line with the 3-year extension that was sought by the bank. Now, remember, shareholders had already approved the reappointment till April 18th, 2026. Now, it is also important to understand what this actually means for the bank. The 3-year extension is the biggest positive that has come in for the counter, as the Street was concerned about the same, given that the key man risk in the case of AU Small Finance Bank was very high. Morgan Stanley says that the stock could stop derating now, and in fact they're expecting some strong re-rating to come in over the next few years. It is also important to understand how the company has fared under his leadership. Now, since his appointment in April 2020, NIMs have improved from 4.8% to 6.2%. The CASA ratio has also significantly improved from 14% to nearly 38%. Loans and deposits have nearly doubled to 55,600 crores and 58,300 crores respectively. However, GNPA and NNPA has remained benign at 1.8% and 0.5%. ROA has improved marginally from 1.9% to 2%, but it is the ROE that has in fact seen a decline from 17.9% to 15.2%. But not just AU Small Finance Bank, there are several other banks that could be in focus on the back of their top PRAS terms ending in 2023. First up, we have City Union Bank. The term will be ending in April 2023. Equitas, SFB, Karur Vyasa Bank, HDFC Bank, ICICI Bank and Kotak Mahindra Bank are some of the banks where the top PRAS term ending will be in 2023.
Okay, thank you so much for that, Vamakshi. But Samit, coming back to you and OMCs, we are seeing they could be in focus today because we're seeing a sharp decline in the Singapore GRMs. How will this impact the oil refining companies? Could you talk to us about that?
Well, if you see, it's a double whammy for the oil refining and oil marketing companies. Firstly, because the Singapore gross refining margins have declined, and secondly, the Brent crude prices have also surged. Coming on to the Singapore gross refining margin, they have declined to around $3.7 from $5.2 that we had seen yesterday, and from the 2023 peak of around $14.3 per barrel, the Singapore gross refining margins are down nearly 75%. Now, two reasons why this has declined. Firstly, is the spike in crude oil prices, and second is the reason is the fact that the higher refined product inventory has led to this drop in the refining margin. And when it comes to Brent crude, they have surged to around $87 per barrel level, and the surge is owing to the lower than expected inflation in the US and on surprise OPEC voluntary cut in output that we had seen last week. Now, higher crude prices means that the marketing margins of the retail fuel or petrol and diesel comes down for the oil marketing companies. Now, on the refining side, if you see, generally a $1 per barrel drop in the gross refining margin impacts MRPL's revenue by around 700 crore rupees. For IOCL, BPCL and HPCL, their earnings come down by around 14 to 16% by every $1 per barrel drop in GRM, and for Reliance Industries, on a consolidated basis, their earnings get impacted by around 4 to 5%. And when it comes to the marketing business, now the current crude prices are around $87 per barrel, and a few weeks back the crude prices were trading around the $75 per barrel mark. So a $12 increase in crude oil prices have reduced the diesel marketing margin by around 2 odd rupees, and for petrol the marketing margins have come down by around 5 rupees per litre for the oil marketing companies.
Well, all right, thank you for that, Somit. And we'll move on. HDFC Bank is also set to report its Q4 numbers, and my colleague Vamakshi is here with what the street is expecting. Over to you, Vamakshi.
Well, the net interest income for the company is expected to come in at 23,500 crores, which is an uptick of nearly 25% on a year-on-year basis is what we're expecting. Operating profit is expected to increase from 16,350 crores to around 19,500 crores, an uptick of nearly 19% year-on-year. Provisions are also expected to go up sequentially to 3,000 crores, an uptick of nearly 9% quarter-on-quarter. PAT is also expected to come in higher by 19% year-on-year basis to 12,000 crores. So that were largely our expectations, but the company did come out with its Q4 updates recently, and advances actually stood at 16 lakh crores, rising nearly 17% year-on-year. We saw some strong double-digit growth come in retail loans, CRB loans as well as corporate loans. So all segments for the bank in terms of loans are seeing a good growth. Deposits on the other hand stood at 18.83 lakh crore, rising nearly 21% on a year-on-year basis, and this growth in turn was led by retail deposits, which saw a good growth of nearly 24% on a year-on-year basis. But on the other hand, wholesale deposits have grown by only 10% year-on-year. We are also seeing some strong CASA growth come in. It is at nearly 9.7% on a quarter-on-quarter basis, and in fact in FY23 the bank has opened nearly 1,416 new branches. Apart from that, as far as the result is concerned, we will be watching out for some commentary that comes in. Asset quality is expected to remain stable. Commentary on margins could be important as the bank is now focusing on deposit mobilization. The commentary on the credit card will be important to monitor, as well as the commentary from the merger will be an important factor to watch out for.
So much for that, Vamakshi. We'll be watching out for HDFC Bank's numbers that will be coming over the weekend. We had Milind Karmarkar, the director and fund manager at Dalal and Barucha Portfolio Managers, talking about the market. Now, he believes that there is a great buying opportunity in the market right now. While some countries can enter into a recession, he believes that Indian markets, he does see some bit of an opportunity. Where is he seeing this opportunity? What is his view on the markets? Let's go cross and listen in.
My personal view is that it's a great buying opportunity because I always believe that human brain is wired for the short term. I try and connect history with the current situation. It's nothing to do with whether history repeats itself. I think history repeats itself because it's all about human behavior. So the way humans behaved when there were a similar situation, and I think the behavior will continue to be the same. So that is the reason why I believe that we were, most of the situations which we came across between 98, 99 to 2003, we have seen a repeat of almost all those situations in the recent past.
Give me an example of what you're referring
to. So 98, 99, we had the banking crisis, NPAs went up to 10%. Then government had to restructure the banks. They had to put in a lot of money into the banks. We had one of the worst periods between 93 to 2003 when virtually market had not given any returns. Most of the infrastructure stocks had come out with bad results. And we had in 2001, we had 9/11. Prior to that, we had SARS. Because of that, there was, of course, it was not as bad as what we had seen recently. But still, it was pretty bad, especially in Asia and Southeast Asia. Then we had Iraq war. So there were a series of events which had impacted the markets between, say, 2000 to 2003. We had seen a similar situation now. We had bad NPAs in the banks, which now have corrected, and now we are at 1.5%, 2%. We also had, recently we had COVID, which impacted. We have a Ukraine war as of now. So I remember reading a communique from Reserve Bank of India in 31st March 2003.
Not 23, 2003.
2000, okay. That's correct. That's correct. 20 years back.
Okay.
So, which went on saying that though India is the fastest growing economy as of now in India, in the world, we still have worries about the global growth. It is likely that most of the global growth will fall below 2%. In fact, some of the countries may go into recession as well. We don't know how the impact of Iraq war will be, and it could hit India's future as well. And because of all of these things, we are extremely cautious. And then RBI had also increased interest rates at that point in time. But things changed, and then you know how the markets and the economy behaved between 2003 to 2008. Like, we had a GDP growth of, I think, 3.8% in 2003. We went up all the way to 8.5%. So that is, even oil prices went up during that time. So we are seeing a repeat of that as well.
Okay, and obviously long weekend is here, and we have some exciting innovation that is actually coming from PVR and Inox. Obviously, India's biggest film exhibitor, PVR Inox, have launched a first of its kind trailer screening that will be on the big screen. So now you can pay ₹1 and go to the theatre and watch all the trailers of the upcoming movies. Now, this was going to be across major cinemas that they have at the prime time slots twice a day that will be happening, except for in states of Andhra Pradesh, Telangana, as well as Tamil Nadu. The prices are going to be controlled as of now. This is going to be, they're going to be showcasing 10 trailers of the latest movies in a 30-minute time slot at a price of just ₹1. Now, mainly the purpose of this launch, what analysts believe, that maybe it could maybe support the footfalls of the company, increase their footfalls, increase in terms of, captivating the consumer base and giving a consumer an opportunity. Instead of watching trailers on your phones, you can watch the trailers on the big screen as well. Advanced bookings, that could also increase watching trailers, so that would be a positive there as well. And other than that, Nuvama has specifically mentioned that the content innovation by the company shall aid in terms of the footfall growth of the company. Other than that, they're maintaining a buy on the company given a target price of ₹2,125 per share. This will benefit movies, will not only be big budget movies, but also maybe something that is in a smaller range, it could benefit that as well. Though there will be no major impact in terms of impact during the peak demand season as well, no incremental cost. So that is something that could turn out well for PVR, but an interesting launch there from PVR.
Well, absolutely, Vinny. I wonder if we'll go and watch trailers for 30 minutes in a theatre.
That is something that we'll watch out for, but because the initial takings that they have, it was quite good. So let's watch out and see who's actually going for the movie. Trailers, actually, specifically.
Trailers for 30 minutes, absolutely. So, well, PVR is the stock in focus, but besides that, we have some other stocks that you need to keep an eye out on. And for that, I have my colleague Ashesha joining us to tell you all the stocks that you need to keep on your radar for today's trading session. Over to you, Ashesha.
Yes, a whole host of stocks will be in focus today. Most importantly, we will have TCS in focus, and that will be on the back of results that they have reported. So TCS has reported muted set of numbers this quarter, largely on the back of deal win momentum being strong this quarter. Apart from that, HDFC Bank will also be in focus today, and that is because they've signed a master link a bank credit agreement with Export-Import Bank of Korea for about $200 million of credit. This pact was signed in Gift City, Gujarat. So on the back of this plans, HDFC Bank will also be in focus today. Also keep an eye out on BL Kashyap, and that is on the back of their order wins that the company has informed the exchanges about. The company has won new orders aggregating to about 141 odd crores. Total order book as on date now stands at 2,522 odd crores. So on the back of these order wins that have come in, keep an eye out on BL Kashyap in today's trading session. Moving on to Campus Activewear, and that will be in focus. That is because company has acquired land and building from Marico Industries Limited to expand its existing capacity for manufacturing of semi-finished goods and assembly of footwear. The total cash consideration for this transaction stands at 16.5 crore rupees. On account of this deal that has happened, keep an eye out on Campus Activewear as well in today's trading session. Moving on to Rail Vikas Nigam Limited, or RVNL, and that one will be in focus. That is because the company has received letter of award from Northwestern Railway for provision of automatic block signalling. The total order worth stands at 63 crores. So order wins is the name of the game for RVNL, and today also they have received letter of award for an order worth about 63 crores. So keep an eye out on RVNL on the back of this news. RITES will also be in focus, and that is because state-owned company has received an order worth 72 crores from Kerala Infrastructure Investment Fund. Lastly, SRF will be in focus on the back of their capex plans. The company has said that the H plant has been commissioned and capitalized with an aggregate capex of 223 crores. So some capex plans coming in their way, and on the back of this news, SRF will also be in focus today.
Thank you so much for that, Ashesha. We'll keep an eye out on those individual stock names. But, let's just specifically talk about sector-wise. We'll be having a lot of, obviously, companies reporting their numbers. Overall, for FMCG and retail, let's just look at what are the key highlights that one should be watching out for. What are we expecting there as well? Rural demand, maybe that continues to be a bit of a drag. For ITC, cigarette may be showing some signs of a recovery and a demand resilience over there as well. On the other hand, on the FMCG side, when you talk about more on the discretionary side, paint, adhesives, innerwear, that space may be showing some signs of reduced growth in terms of Q4 is what we're expecting. Advertisements and promotion spends overall for the FMCG pack maybe would be a bit normalized going forward, especially in terms of the commodity price stabilization that we've seen coming in as well. On the retail front, specifically when you talk about apparels, etc., shoe, footwear companies as well, what we're expecting is maybe the demand side has witnessed a bit of a pressure. The lower end, especially of the pyramid, is expecting to see a bit more pressure. So yes, that could be a factor that one could watch out for. Other than that, expect an impact in terms of the margins led by lower operating leverage as well as the high input costs for retail players. So that's a roundup that we should be expecting in terms of FMCG and retail, Ankita.
All right, Vinny, and with that, we're completely out of time on this one. Thank you so much for tuning in. This is Vinny, me, and the entire show and the entire team that put the show together signing off. Thank you so much. Don't go anywhere. The markets will take the action forward.